Hi, good afternoon. I'm Pete Andresen with Andresen and Associates. We are fee-only investment advisors in Salinas, California. I'm sending this out to my clients just to discuss what's been happening in the last week or so in the financial markets. First, a little disclaimer. If you are not my client, then this is entertaining and interesting, but keep in mind that we don't have a crystal ball. Investments go down as well as up. Nobody really knows what's going to happen. You got to have courage and you got to have endurance. So on with the big news. The big news is inflation. Last week, inflation on the producer's price side, that's the wholesale side, hit some pretty big highs, 40-year highs, very dramatic, which means to me that it's going to filter through into next month because wholesale becomes retail. And that's what we're seeing. Why is inflation persisting for so long? Well, and why haven't we had a recession yet? I think it's because there's a lot more cash in the system than we realize. It's a lot like your friend who squirts too much briquette lighter fluid all over the barbecue pit so that it's puddled in the bottom. And then when it lights up, it has to burn off. And that's what we're seeing. We're seeing all that cash burn off in the face of this inflation. The other thing I'm noticing is that people aren't really taking that too seriously. They're still spending, they're still consuming a lot at any price. And what I notice is that the financial markets don't seem to really think a recession is going to happen. Optimism is still a theme in the stock market because last Friday we had that big boom as soon as we had some good news. Today it reversed a little bit. But basically, there's no sense of doom and gloom that characterize a market bottom. This is why we haven't sold out. This is why we're still invested. And that's why we're really diversified. Now, while inflation is raging, I did notice that gasoline prices came down dramatically over the weekend. And the other thing that happened was if you're looking at commodities, commodities have really declined a lot. And that indicates that fears of recession are settling into the industrial side of the economy. And right now, though, we're getting some pretty decent earnings, and there's no indication really that we're going to have a recession at this time. So what this all adds up to is that I think we're going to push a recession if we have one. It's going to get pushed into later in 2022 and into 2023. We had predicted before that this would be a 2 to 3 year market cycle, bear market cycle. That's the average. It could get worse. It might get better. But right now we are, let's call it 8 months into what may be a 3-year experience. Now, about that rally, I don't trust it just because of that. I think that the other shoe has yet to drop. Internationally, we have all kinds of issues going on. We've got the war in Ukraine. We've got the demographic situation in Europe. Also, vast COVID stimuluses, I think, have delayed the reality settling in that many European countries have grossly violated the terms of the euro. So that's why the euro is at 20-year lows to the dollar. Meanwhile, the yen is at 20-year lows to the dollar. So historically, what this tells us is that this is a good time. Now, we could be wrong this time. It might not happen. But historically, dollar highs like this are great opportunities to start gradually and carefully accumulating international assets. They have a tendency to outperform in the following decade when that happens. The other thing that's happening is I think that the small stock market has priced in a recession already because small stock valuations in the form of their price earnings ratios have declined to the point that there are bargains out there. So once again, gradual, careful accumulation seems to be the order of the day. I have no idea what's going to go on beyond that. Now, this morning, a client asked an interesting question. If I buy now, what'll that look like in 5 years? Short answer, we can't really say except that historically, buying those bargains will look good in hindsight 5 years later. So that's what we're doing. We're staying careful, we're staying cautious, we're staying diversified, and we're gradually accumulating those bargains. And it's an ugly thing because we can't really pick a bargain. We can pick a bargain, but we can't pick a bottom. Anyway, happy Monday. Take care of yourself and blessings.